With the recent barbaric terror attack in Israel, along with the ongoing war in the Ukraine, a lot of investors have been asking me about defense stocks. What are their different options? What are the upsides, downsides? What are the drawbacks that investors should consider? If you enjoy educational investment videos, you're watching Unrivaled Investing. So let's go through sort of what the different types of defense stocks that are out there so you can understand, what it is that sort of drives them and the broad business. So this is going to do a broad overview of a couple of different sectors in the defense space that should help you understand what's out there. So the first, key biggest part of the defense budget, you're talking about the primes. These are the major players, the Raytheons, the Lockheed Martins. They're known for their stability because they have a diversified base of large contracts that are typically recurring in nature. It might be tied to missiles, it might be tied to tanks or helicopters, satellites. So these are the primes. These are the biggest players out there. Lockheed Martin, over $100 billion company. Part of the challenge here is that it is diversified. So it is spread across so many different programs. It might be tied to missile and fire control, which is sensors and tactical strike missiles. It might be tied to their aeronautics division, like their Joint Strike Fighter, the F-35, or it might be tied to other planes, the F-16. So you can see it's a lot of different programs. This isn't like Apple selling the iPhone and the iPhone's just rolling out around the world, and you can say, oh, okay, it goes from a few million users to a few billion users, and I can see that growth very clearly. Here it is. You're looking at a lot of different programs that some people can't even get access to. It's only, are you on that approved list to, let's say, buy the latest cutting edge, technology? Oh, maybe they say, oh no, only the US can have the Joint Strike Fighter, or maybe only the US allies can have it. So these are the dynamics that investors consider, is that there's a lot of different programs. It's hard to just say, oh, this is going to drive this stock. The Blackhawks are going to drive, the Lockheed Martin stock. It's very difficult. And plus they say there's some nebulous things like integrated warfare systems and sensors. So there's a lot of different components that go into this, but ultimately you're looking at businesses, generally looking at these defense primes that are slower growth, talking about a lot of free cash flow, and usually their free cash flow is being used to repurchase stock or pay out dividends. And so you're looking at sort of slow and steady businesses in a recession if you have a steady government budget. And that's a key point that I'm going to cover later on. If you have a steady government budget, this is a safe haven for potential, for a potential recession, because with a steady government budget, i.e. steady demand, then in a recession where consumers, might be pulling back, this is a place where you might see steady performance over time in their core fundamentals. Looking at AI ticker chat, which leverages artificial intelligence to give a range of, how can a stock perform over time. So this is their cutting edge AI predict feature. It so effectively says, yeah, maybe, you have single digit growth over time, stable margins. You have multiple, an earnings multiple 5 years out that is effectively around the same level. And, it doesn't really get to a compelling return, partly because, the growth isn't there. And you might have a little bit of multiple contraction. So it's really about the free cash flow and the slight growth that goes to you over time. So this isn't going to be sort of a world-changing return that you could get with something like Lockheed Martin. That's at least what AI Ticker Chat is saying. First month is free. See the link below. Another core category in the defense sector, moving from the primes to software. And with software, you're really talking about the current future, or you're no longer talking about these big legacy institutions like Lockheed Martin or Raytheon or Northrop Grumman. What you're really talking about is, where are we heading in the future? Where are the points where, things can really get problematic? And for example, with software, that's how you can shut down governments. That's how you can shut down businesses. So it's both about hardening, the existing infrastructure, protecting it from attacks, as well as putting yourself in a position to shut down someone else's infrastructure. And so that is the current and future of, software, soft war, where it's about, hey, testing someone else's vulnerabilities. Can you break their own systems without necessarily getting into a hot war with the legacy technology from, let's say, the primes? So that is an important understanding. A lot of it's also preparedness and the data analytics to hopefully anticipate bad events before they happen and prevent them. Now, one player that is often called to mind is Palantir, PLTR. I've talked about it several times, but even Palantir, which is, become well known for being a critical service for a lot of Western governments, it's important to understand that the business isn't a pure play on government budgets, isn't a pure play on defense. And so if you're saying, hey, I want to buy something for defense, that's really no longer the case, even because if you look at their second quarter, 300 million came from government revenue and 230 million came from commercial. For almost half of their business is commercial in nature. So you're really making a bet that they execute both on a government and commercial side. And Palantir is not the only one facing this. You look at Booz Allen Hamilton, another software contractor type of business where you see 45% of their business is tied to defense, another 18% tied to intelligence, but the rest is tied to civil or global commerce. So you're looking at these different types of things. So if, once again, you're trying to make a bet on defense, it starts getting very muddy for a Palantir, Booz Allen Hamilton. For a pure play prime like Lockheed Martin, it's clear. But even then, if you're looking at some of these large legacy institutions like a Boeing, you might say, well, it does have this defense element with maybe some fighter jets, but you also have legacy and really a large component being commercial aircrafts. So when you're looking at the avionics plays, once again, it's not a pure play defense bet. So this is important for investors to consider. So clearly, Palantir, Booz Allen Hamilton are not pure defense plays right now. They've moved into civil as well as commercial solutions. What about emerging technologies? Well, there's a lot of things that are growing much faster than the primes that are quite exciting. Things like hypersonic missiles, artificial intelligence, autonomous vehicles, one of which, who's been making a big push in various different autonomous solutions, is Anduril. They have this Fury, which is the autonomous air vehicle, and they have grown very quickly over time from just a few $1 million in revenue, very fast revenue growth rate at, to the tune of several 100%. They recently did a $1.5 billion Series E funding round, but that once again reflects the challenge that investors might be considering, when you're considering, hey, these defense primes that are slower growth, more cash flow generators, you have software solutions like Palantir, but it's not a pure defense play. And then you have these emerging players that might be growing very quickly, but they're also not public. You might think of SpaceX, Anduril, where it's just not even available for public investors. So that is more for the, ultra high net worth investor that says, hey, I want to make a direct bet on these types of things that are leveraging computer vision technology and meshing it with the with real world interfaces. And I think there will be a lot of demand for low cost solutions like that in the future. So it wouldn't surprise me to see Anduril continue to succeed and grow in the future. But once again, it's not available. So how am I personally investing, as I'm thinking about this defense landscape, thinking about a world that's increasingly, at risk of broader wars? First of all, in full disclosure, this is not financial advice. Also, quick plug, if you're looking to take charge of your investment journey, consider unrivaledinvesting.com for compelling investment ideas, real-time portfolio updates, and our exclusive Discord server available for premium annual subscribers. By the way, later this month, I'm going to be raising the rate, so now's the time to lock in the favorable pricing. So a few things for investors to consider. And if there's one key takeaway from this video that I think you should consider, is that any investment you make, you should be thinking about, what's this business look like in 10 years from now? If you are able to think about that and incorporate that into your process for long-term investing, I think you'll be a better investor. And so it's important to understand, okay, what are the tailwinds? What are the headwinds over the next 10 years that I might be facing? So with something like the US government, here is a chart that shows US government interest payments over time. This is from the US government, the US Bureau of Economic Analysis. It shows that the cost of interest on our debt outstanding at the United States has just exploded higher. It has gone parabolic. This is not what you want to see. This is typically the sign of like, oh my goodness, you're nearly broke. I mean, nearly $1 trillion in interest payments that you're looking at here annually. And this is a confluence of higher amounts of deficit spending, record deficit spendings, combined with the Federal Reserve looking to combat inflation and raising interest rates. So you have this 1-2 punch that's causing interest expense for the US government to explode higher. This is not sustainable. And so just thinking out over the next 10 years, this is going to be a headwind for the primes, for any company that's relying on future growth with government contracts, because the government is going to say that credit card is getting declined. You're going to have a problem like that, because you can't just say, hey, let's just issue unlimited amounts of bonds. Who's going to be buying them? Especially when you start saying, well, maybe we can't actually afford this. So there's going to be a reckoning with US budgets in the years ahead. And when that happens, there's pushback on the defense players. There's pushback on who are the ones that benefit the most from government spending. And so that is a key point that investors need to consider, in that the largest beneficiaries, like the primes, their growth will be it'll be even harder. And I think you're ultimately going to need to see a change in models from the cost plus models of saying, hey, tell me everything you want to do and I'll include it all in the cost and then I'll just have some sort of margin, to a more of the SpaceX and a real type of model of saying, hey, we're going to use these components. It's going to be way lower cost. I think you're going to need to see a huge deflation in terms of the products, saying, hey, look how much we can do with a lower cost solution, leveraging artificial intelligence like, AI vision to help dramatically, revolutionize some of these products. And I think, Anduril does have some things like this where they set up these towers just using computer sensors can tell you, okay, there are people crossing the border and things like that. So that is a game changer, using, once again, AI vision. So that'll be a huge advantage versus these legacy programs, that cost billions and billions and billions of dollars. So this is a key aspect to consider as the budget sort of starts managing, as the government starts managing its budget. So this is a headwind, I would actually think, despite a world increasingly at tension, is that I don't think the US government can really afford it over the next 10 years. Another key aspect is if the US government is increasingly struggling with higher interest rates, higher interest expenses, I ultimately think that's going to lead to a crowding out in the corporate sector, where you're going to say, wait a second, if you can get, 4.8% on your cash, and that's what I'm personally doing at Interactive Brokers, see the link below, then I'm going to need to get, if I'm going to be buying a stock or buying a corporate bond, okay, let's move from the least risk, which is cash, US, which is effectively a government, guarantee. So looking at that cash, that 4.8%, Interactive Brokers. So then I'm going, okay, let's do corporate bonds. Okay, so corporate bonds, in order to entice me, now you're really talking about 5, 6, 7% in order to get me there. So then if you're talking about a stock, you need to have really strong growth or to yield a minimum of, let's say, 7, 8%. And truth is, most stocks around a 20 times earnings multiple, which is where the market is, that's not really being priced in correctly, in my opinion. So that's why I think you could see continued to have pressure on stocks over time. And that's why having a large cash component is, where my portfolio is right now, where I do have a sizable cash component reflecting these dynamics. If the US government is going to be facing higher interest rates and large deficits, another key aspect for investors to consider is thinking about destiny. Thinking about, that over those 10 years, will this business definitely be much bigger in the future? And, if you read and cover enough companies, and I share what I'm personally buying with my subscribers at unrivaledinvesting.com, I'm looking for things where it's like, it's either has a multi-decade track record proving that they are able to create value and grow, or they have management that has a multi-decade track record proving that they can create value and grow, or there's currently growing at a very nice clip, and they're saying, hey, here's the roadmap for why we're going to be much bigger in the future. So it needs to be something of destiny, of saying, I see where it is now, and I see why it could be much bigger in the future, and that's why I want to align with it. And this is, I think, another key aspect to consider when investors are considering defense stocks in the world, increasingly in tension and fighting, is that what type of future do you want to be betting on? For me personally, I don't want to be betting on saying, hey, I hope this company is selling more missiles and tanks and jet fighters in the future. That's just not a future. That's not a peaceful and prosperous future that I'd ultimately want to envision. I would like to envision a future where maybe Palantir at some point, where I'm like, oh, okay, it's they're preventing a lot of bad things from happening. Their software has become critical to so many players. So maybe it's something like that, but it's looking for things that are today, saying, hey, I like the vision, I like the value proposition today, and I like the future that they're encouraging, ultimately, a more peaceful and prosperous future. So betting on those types of plays of saying, hey, I hope this company's selling more missiles in the future. That's just not something for me personally that I want to align myself with. That's not something that turns me on when I wake up in the morning saying, oh man, I hope Lockheed sells, more missiles. That doesn't do it for me. But look, everyone has their own investment journey. And I hope this video talking about various different sectors, within the subsectors within defense has been helpful for you. Thanks so much for tuning into Unrivaled Investing.